Hey everybody, happy Thursday and welcome to a special live stream edition with our guest Jose, who's a co-founder of OptionsSwing. They're really active on Instagram, but they also have a Twitter. And Jose, thank you so much for joining. And can you tell us a little bit about yourself and OptionsSwing in general for those that aren't familiar?
Thank you, Jake, and thank you to the TrendSpider team for inviting me. Um, Not only we're on Instagram, but we also run a Discord server
Ah,
where we educate people on the stock market. We mostly focus on options trading, and we've been running the server for about 2 years, and we have about 2,000 people trading with us on a daily.
love it. And are you guys mostly focused on stocks, crypto, all of the above, or what do you guys kind of focus on that end of things?
We focus mostly on options trading, and we do have some crypto channels, but mostly options, to be honest.
Love it. Well,
Yeah.
that makes sense with the name OptionsSwing. And so tonight we're going to go over just the last couple of weeks that have been an absolute shit show. Excuse my
Oh, yeah.
French. And really look at a couple different perspectives. So I'm always kind of looking for those that are familiar with how I post things on Twitter, kind of looking at the long term side of things. But Jose is really looking at more of the short term side of things, really focusing on the 4 hour chart. So what we're going to do is we're going to kind of go back and forth on each ticker. We're going to go over the broad markets just to get an overview of kind of what's going on in the market from a top down approach, and then jump into some individual names and kind of see what's showing strength, what's showing some weakness going into the month of October. So first things first, let's jump into the SPY chart. I'll go over just a quick overview of the daily, the weekly, and the monthly, kind of seeing what's showing up into really the first day of October tomorrow. And then we'll switch it over to Jose, looking at more of the short term side of things as they're more focused on kind of those shorter term time frames. So on SPY, we've got the daily chart up here. And before we jump too far into the different levels, I kind of want to go over this anchored VWAP and what exactly this is showing. So we've got two anchored VWAPs here. So we've got the anchored VWAP from the May 12th low, and then we have the anchored VWAP from the May 19th low. Now, we also have an offset here, which is 0.75% below the first anchored VWAP. So why am I using an offset and why is that important? The reason is you'll see here that if we just get rid of this offset real quick and just have no offset at all, you'll see here that we actually have tested below this band before. So we do have some margin of error a couple different times below this anchored VWAP. So what we want to do is we want to add a little flexibility around this area to capture some of those times where the price action has moved below it, but still bounced right after it. So if we go to properties and we add a percentage band, you'll see here that this negative 0.75% is actually going to add another band 0.75% below that band that we're looking at. So if we do that, you'll see here that now we're actually taking into account some of these undercuts of that anchored VWAP. So here on June 18th, here on September 20th, and you can see here that we pretty much closed right at this offset today, even a little below it. So we are getting very close to having a bigger breakdown here, and it's a little worrisome because you can see that using the anchored volume by price, we do not have a lot of volume below. So there's not a lot of liquidity below. Pretty much this whole area highlighted in blue, you can tell since the May 12th low, there's not a lot of shares holding below. So, the price can, for those that do follow the anchored volume by price and the volume gaps, we're entering a volume gap and we're about to lose this last kind of leg, this anchored VWAP offset. And we don't have a lot of, we don't have a lot of supply below or a lot of shares below, keeping us from moving down very quickly to the 420s, 422 area below, which is highlighted in this green zone. So You know, obviously these levels are always flexible. You can always have a little bit of a breakdown and a reversal. I think futures are up right now, but how did futures do last night? And then what did we do today? So, you know, this is a time where futures aren't necessarily going to do too much justice. You have to look at the price action during the actual day. So for those that are like waking up at 1, 2 in the morning, looking at futures, you know, save your sleep, just sleep and wake up at 7, let the price action do its thing during the day when the market's actually open. That's what's going to show us where this is going to go. So if we do continue to break down 420 to 422 is our level below, which is highlighted in green. So that's the daily. Now, if we look at the weekly, not looking much better. You can see here that I've highlighted these different zones with the channel drawing tool. And if we anchor the volume by price, meaning that we're measuring the volume by price from the COVID lows, you'll see here that we have this huge volume node, this point of control here, right around 416 to around 420. So, you know, this is even showing we could even move a little lower than that 420 to 422 that we just looked at on the daily chart. So you'll see here that we are starting to break down through this ascending wedge. And the next area of interest below, this is where a lot of people would be back to break even, possibly some of that supply drying up, would be right around, let's say 418 to 420, give or take a few points. So all in all, not looking great here. Obviously, just because we're not looking great, the weekly chart is not over. We still have one more day left, Friday, for the price action to do its thing. Now, one thing that has closed is the monthly chart. The monthly chart did close today. And if you look at the monthly setup here, looking back really since 2009, we have two pretty interesting levels that we're watching, right? So we've got this longer term level of resistance, and that's way up here around, you know, in the 500s, the mid 500s. But you also have this area below, which is highlighted in 1, which is, let's say, around 390 to around 400. Remember, these are zones. They're not exact levels. You know, I can't come here and say, yeah, we're going to bounce at 401. What? You know, nobody knows that exact level. You have to use zones. And so the zone below is right around 400 to around 380. And you also have a gap below. So if you turn on the daily chart, you turn on the gap snake, you'll see here that we do have that gap below, which would fill right around 400. So that is definitely the area to watch. On the monthly chart, it does look like we may experience 1 before 2, but we'll just have to see what happens. And will this previous resistance act as support? We'll have to see. So that's kind of the longer term side of things. Looking at SPY, definitely not a strong monthly candle, engulfing literally the previous month in almost the month of July as well. And you know, it's just hard to be bullish right now, but anything can happen. You know, sentiment is very bearish right now. So who knows? Do we get a bounce just because everybody's bearish? We'll have to see. But you know, let's hand it off to Jose and kind of look at the shorter term timeframes for those that may be looking at more day trades, very short term swing trades, and kind of get an idea of what's going on that end of things.
Hi, thank you, Jake. So looking basically at SPY on the 4-hour chart, as you can see, we were basically trading within a channel since last year. You know, like we had the vaccine news. After the vaccine news, we basically went parabolic, the market, and we were basically trading within this channel. You know, every day was being bought, 1, 2, 3, 4, and even a lot more before. But as you can see, between this week and last week, we've been basically breaking down. We broke down from the channel, and I agree with you. Right now, we're trying to make a double bottom here. I don't think we're gonna make it. And I agree with you. We can probably drop to 420 at least. Looking at the RSI, I'm not convinced that we have a divergence on the RSI yet. So I think downward we're gonna keep on dropping, to be honest.
Yeah, it's looking pretty rough. So as far as kind of your levels go, it looks like you're using a mix of diagonal trend lines and horizontal levels. Is there kind of an exact, or not exact, but is there a level you mentioned 420? Is that really just taking some of those previous highs and that low from mid-July and kind of looking at that zone? Is that kind of where you're getting that?
Yeah, yeah,
Signal?
exactly. Obviously, the level isn't exact. I agree with you. They're more like to me resistance and and supports. They tend to be more psychological levels in a sense. So I think the area, like, we should be bouncing around the 420 area, um, not at 420 to be exact. You get me?
Yeah, we'll give it, 418, 422. We'll see how many people get margin called, how many people, panic sell. I think that's the main thing with these
Yeah,
levels. You've got people on margin, you've got people who have their whole life savings with like 4x leverage going into, some of
exactly. So
these moves down, and that creates these zones rather than exact price points, because price, if you're panic selling on margin, you're not going to say, oh well, I'll wait for 420. You're going to sell, you're going to market sell, and then that's where these kind of zones come from rather than exact level.
yeah, yeah, exactly. I agree with you. Not only that, but I don't think we should focus on timing the bottom, to be honest. We should be more focused on watching for that reversal, to be honest, and trading a breakout. After we break out from a downtrend or something, or we see like uh, that bullish divergence on the RSI, or we have some positive news, regarding the market. Because as you can see, we started dropping as soon as the Fed said that they were gonna scale back on their support to the economy. Since then we've been dropping. Today I thought that we were gonna probably bounce, after Congress passed the bill and everything to keep the government running, but like I mentioned, it was faded in less than 2 hours. And I mean, I don't see any positive news in the near term, to be honest. The only thing that I see is probably, like I mentioned to you, like, probably we're gonna have some kind of run up into earnings, and probably big tech is gonna be dragging the market. We're gonna have our bounce, but honestly, like, I don't see anything positive about the market.
Yeah, Octobers are known for some pretty big moves to the downside, so we'll see if that plays out into the coming weeks. Now let's jump into the cues. I'll take back over, looking at some of the shorter term and then the longer term side of things. And the cues are definitely leading, right? So the cues have already really broke down through the previous lows. So SPY is kind of right at that previous low from September 20th. The cues are way ahead of it, and we're actually getting close to this May low anchored VWAP. So if I turn off the gap snake, you'll see here that we technically are still holding these May low anchored VWAPs. And essentially what that means is, what is the average price per share that has been transacted since the May lows? And this is something Brian Shannon taught me. This is essentially a dollar cost average of everybody who's participated in the market since the May capitulation point. And so you'll see here, we're getting pretty close to everybody's getting back to break even. So a lot of the time the price can bounce here, not necessarily because buyers step in, but because everybody's back to break even. Imagine that you're up, you know, in early September, you're up 7%. Price starts dropping, and now you're today pretty much back to break even. Now, if you have, let's say you have a lot of the Qs, maybe you have 500 shares of the Qs, you may say, I want to hold a core position of 200 shares or 100 shares, but I'm willing to sell 400 of those shares out of the 500. Well, if you're scaling out all the way down here, you're taking your profit. And then once you finally get back down to break even, you're probably going to stop selling, because why would you sell if you don't have any profits, unless you're panicking or you're on margin and you have to. This is a very crucial area. We have not broken down through the May lows yet. Now, as we looked at on SPY, we actually have almost broken down through that crucial area. And we're actually not there yet on the Qs, even though the Qs are leading to the downside. But if we do break this 355 zone on the Qs, things are going to get pretty ugly. Now, if you look at the weekly chart, this is when things get really ugly. If we anchor the volume by price from the COVID lows, so we're measuring the volume distribution essentially from the COVID lows, you'll see here that we are starting to break down through this first volume shelf. And this is a great example of showing you guys volume shelves are not an end all be all for a bounce. Just because there's a volume shelf there does not mean that price cannot drop below it. That is just an area of interest. So all of these things that we talk about are areas of interest until they're proving themselves otherwise. And so in this case, you'll see here that we're breaking down through this volume shelf and we're entering this volume gap below. What is a volume gap? Well, we just talked about it on SPY. It's an area where there's not a lot of volume below. There's not a lot of people holding here. And so the price can drop very quickly through this area. Now, if we do anchor a VWAP from the 2020 lows in September, pretty much a year ago, and then we anchor another one here because this is essentially the handoff, you'll see that the anchored VWAP is right around 344, 345. So if we do start really kind of crashing through this gap, keep an eye on 344. That would be an area of interest below. That's where a lot of people would be back to break even since participating in the market since March. And then if we did continue to break down, the anchored VWAP from the September lows is right around 325. So, that's still quite a ways to the downside. So that would be another, 10% drawdown. But one thing that I will point out, notice here on the weekly candles, this is going to be the fourth red week in a row. And so this is important. You always have to have the bull case. You have to have the bear case. You can't look at the market and say, oh, I'm bearish and there's nothing else that's going to happen. The market can easily go up from here. There's a lot of people that are bearish, and that is generally a sign that a lot of people are in cash. Who else is going to sell if everybody's in cash? Maybe these long-term holders, if they need the money. Some people look at this and they say, oh, buy the dip opportunity. Now, the thing that I want to point out here is most of the time when we have had 3 red weeks in a row, and this is something you can do with the pattern recognition, 4 red weeks in a row is what I have highlighted here. So here's 4 red weeks in a row, bottom. Here's, this is the COVID lows, so it's kind of a little different, but you had 1, 2, 3, 4, 5 red weeks in a row, and that was our bottom. So we are now at 4 red weeks in a row. It's not highlighting this one because the week isn't over yet, but you'll see here, if we go back in time, 4 red weeks in a row has generally been a bottom. So, looking at kind of the bear case versus the bull case, we did have the 2018 pretty much meltdown from early October, which is very convenient that we're pretty much starting October tomorrow and we are in a very similar spot. But same thing here. We had 4 red weeks in a row, and we actually had a relief bounce in a week and a half after that, and then we continued down. So you're not always going to get just a straight move to the downside. And this is what's nice about the pattern recognition on TrendSpider is I don't have to go count these red candles. I can just turn it on the pattern recognition and I can see anytime we've had 4 red candles in a row, what has happened. And generally it is at least a short-term bottom. So I did want to point that out. If you are, let's say, want to look at 4 green candles in a row or 5 green candles in a row or 6 green candles in a row, just go to the pattern recognition piece here, type in, let's say 4, 5. You can see here, if I want to see 5 red or green candles in a row, just check that box, apply it, and you'll see that it will pop up here. So this makes that whole process of looking for these types of patterns a lot more efficient. And this is something I use pretty often. So all in all, volume gap below, not a lot of levels of interest until we get to maybe the mid 340s. So keep that in mind. We don't have a lot of volume below. Going into the month. Oh, wow. Okay. All right. So before we jump into the monthly, let's hand it off to Jose and kind of look at the short term, and then we'll go back and kind of look at the monthly chart on my end of things.
So thank you, Jake. Same thing on QQQ on Nasdaq. You know, ever since last year, every dip has been bought. We have been basically trading within this channel, you know, and right now we're just breaking down below 365. Um, on the RSI, nothing on the RSI. I don't see a bullish divergence on the RSI, and honestly, with interest rates are about to go up, so I don't think we'll see much from tech, you know, going forward. Some of the tech companies are gonna be growing single digits next year, so we'll see. To be honest, I'm not really that bullish on tech. To be honest, I just think that we're gonna have a bounce before earnings. You know, we've been selling off like crazy on Apple, on everything, and probably before they report earnings, they're gonna see a slight bounce, but we'll see what happens after they report earnings. You know, I don't want to say much because, as you say, anything can happen at any time we can reverse, Jake, and hopefully we can reverse. You know, it's better to trade when the market is going up. You know, but we have to wait for earnings, in my opinion. You know, that's gonna decide where the market goes.
Yeah. Now, do you really look at earnings as a function of, we're probably going to have better than expected earnings because the market is so oversold, or, do you think just
When I look at earnings, to be honest, I like focusing mostly on guidance. You know, to see what the companies, uh, how they think they're gonna be performing in the future. You know, and I know many of these companies, many companies are not gonna be performing well next year. You know, and are gonna be growing slower than this year, obviously. Um, I mostly look at guidance just to see what these people are thinking about the market. That's what I try to focus on. And the other thing that I also look at is I try to look at the reaction, you know, to see how the market reacts after they report earnings.
Mhm. As far as kind of the cues, are you looking at the cues to continue to lead? Do you think SPY is going to catch up? Or
I
do you
mean,
think SPY is going to maybe start leading? What are your thoughts on that?
basically, you know, like just a handful of companies are the ones that control everything, are the ones that control SPY and QQQ and everything, just a handful of them. So as long as they move, you know, as those 5 to 10 companies move, everything should be kind of like stable, you know. But as long as you have Apple and Google and Facebook and obviously big tech and then JP Morgan or J&J or CAT today or BA deepin, you know, everything is just gonna go down. I don't
Yeah, it
try
was
to
interesting.
yeah, I try to focus just on a handful of companies because they really tell you how everything else is gonna do, you know.
Hmm. Yeah. Now, as far as the banks go, is there something that kind of is showing a red flag? But before we jump into that, let me kind of look and see at the monthly chart, and then we'll kind of we'll go from there. And we're just having a little bit of gotta love technology here. One second, I just need to get my screen back up. And we'll finish off with IWM and the Qs, and we'll jump into JP Morgan and some of these individual names. Um, so as far as kind of what you have on the screen, you've got the Head and Shoulders up right now, and where would, like, technically, based on your Head and Shoulders, where would you expect a bounce on the Qs? Where would you see that kind of resolving? Do you see it kind of retesting that 362 and bouncing, or that's your level to hold and then you kind of reevaluate from there?
I think it's probably gonna test the bottom of this channel right here. So it's gonna be probably like around 350, you know.
Yeah, well, there's not gonna be too many people happy with that.
So yeah, right now, you know, like I told you, like I mentioned, you know, I'm not trying to time the bottom, you know. I'm just looking at my levels, looking at my charts, and I'll see what happens when the candles get there, you know. But to me, there's still like a long way to go.
Mm-hmm. Yep. I completely agree with that. And so let's jump back over to the monthly. I think we're all set up now. Just a little issue on my end, but to our producer Parker, I just sent you a link where you should be good now to have sharing. So let's jump back into the monthly chart on the cues, and I want to go over something that I did touch on earlier this month. And it's really just a very simple pattern, and it's very interesting how this pattern has kind of played out. So you'll see here that we have 1, 2, 3, 1, 2, 3. Now, what exactly do these mean, and what does this purple or pink line mean? So if I turn on the RSI, you'll see here that one, we have negative divergence. So, negative divergence is always something that you want to pay attention to. And really, the fact that we are starting to kind of break down through some of these previous RSI levels, pretty much from February of 2021. So, if you can use RSI levels and oscillator levels the exact same way um, as price action, right? We broke down through this previous level around 75. That is not bullish, at least for the time being. Now, we did break down through that area back in August to October of 2020, and that was our little blip in the radar. Can we have that same thing this time? Sure. But for now, we are breaking down, and that's something to keep in mind. So that's on the RSI side of things. Negative divergence possibly starting to materialize. But on the 1, 2, 3, what exactly does that mean? Well, if you look back in December of 2017, this is when our number one starts, right? So we had this melt up going into January of 2018. And it doesn't look like it was a big deal, but you can ask anybody that was in the market in 2018. This February drop was pretty aggressive and pretty violent to the downside. And a lot of people got absolutely destroyed on this drop because it was so quick. And so you'll see here, number one is your melt up. Number two is this little blip in the screen here in February and March of 2018. And then pretty much from April of 2018 to August and September of 2018, we melted back up, hit new highs, and then this is where number three comes in. Number three is pretty much October to December of 2018. This is when interest rates became an issue in 2018, and the market absolutely freaked out. Well, fast forward to this year, we've got the same exact setup. You've got your melt up into 2021. So pretty much from November of 2020 all the way to February of 2021, we melted up, hit new highs. It doesn't look like that big of a deal, but if everybody looks back and remembers how they were feeling in March of 2021, it wasn't necessarily the best time in the market for anybody unless you were buying like oil and Home Depot, which absolutely ripped. What happens? Well, we bottomed out and we continued to melt up to new highs. Well, we're in August of 2021 into September of 2021. What's happening? Pretty much the same exact candles that we were seeing back in 2018. Why? Interest rates are becoming a topic again. Tapering is becoming a topic by the Fed. All of these things, very similar, news type of kind of news events, if you want to call them that, are starting to happen again. So let's take a measured move here. If you take the measured move from September 2018 all the way to December of 2018, you'll see here that pretty much we had, what is this? About a 23% move to the downside. If you take that measured move and apply it to here, and then you anchor a VWAP from the March 2020 low, look at how convenient that is. The anchored VWAP is almost right at this measured move. And remember, since the price is above this anchored VWAP, this VWAP is going to continue to move up. So, by the time we possibly get down to there, I'm not saying we're going to, but if this played out the same way it did in 2018, that would coincide very conveniently with this COVID low anchored VWAP right around 290 to 295. So not trying to scare anybody. That's not the point of this live stream. It's to look at what the charts are saying, looking at what historical price action is showing us and kind of take it from there. But, it's something to keep in mind. Now, I can tell you firsthand that the Fed is really good at changing their mind. I got absolutely destroyed in 2016 trying to short the market because the Fed said they were going to raise rates 3 to 4 times in 2016. So I'm like, oh, this is an easy trade. They're going to raise rates. Market's going to tank. Why is the market going to tank? When you raise rates, you've got big money now able to put their money with higher yields and fixed income. They take it out of equities and put it in fixed income, securities, that type of thing, bonds, all those types of vehicles. So what happened? Well, the Fed changed their mind. They said, we're not going to raise rates. We saw how that played out. We saw how the market reacted, and they didn't raise rates. Janet Yellen did not raise rates. So that can easily happen again. I mean, you can see how the market's reacting just to the thought of some of this tapering and interest rate potential increases in the future. So just keep that in mind. Don't bet your whole life savings and your mortgage, your kids and your house on, a trade that hasn't happened yet. Take price action into account first and go from there. Jose, any other comments before we jump into some individual names about the Qs? Or actually we still have IWM, but before we jump into IWM, any last words about the Qs and kind of what you're seeing on that front?
No, just like you're saying, it's better just to be very careful right now. If we have to sit on the sidelines and just watch, it's better just to do that. No one knows where the bleeding will stop, and no one knows where the market will go next. It doesn't matter, nobody knows on Wall Street. So it's just better to be careful.
Yep, absolutely. So we will move on to IWM, which actually looks relatively decent here. Now, IWM is one that you want to kind of look as a risk on, risk off type of ETF. They're small caps. They definitely are more risk on and risk off when the market's really tanking. You do want to look at IWM. You want to look at VIX. And before we jump into IWM, one thing I want to point out here is if you look at VIX, and you look at what VIX did today, let's look at it on my phone. The VIX was up 2.5%. The market was down 1.22%, at least S&P 500. If there was really fear in the market, which there may be, maybe this is just the start of the move down. If there was really some mega fear in the market, you would want to see the VIX more than 2.5% higher than yesterday's close, especially when SPY pretty much tanked into the close. You didn't have that VIX spike like you would expect. Now, I'm not saying that doesn't mean that the market can't go lower, but you would really expect the VIX to be participating a little more if this was truly a big move to the downside. I'm not sure what futures are doing, but like I said, it doesn't matter what futures are doing. It matters what the price action does tomorrow when the market is open. Futures, especially in these market conditions, can literally change in a heartbeat. We were up like 0.83% last night, and we ended up down 1.22%. So just don't waste your time in your sleep trying to look at futures in the middle of the night. It's the only price action you want to worry about, unless you're trading futures, is price action that's happening when the market is open. So that's my little spiel there. IWM, let's jump into IWM. Look at the top down. We'll look at monthly going into the weekly and the daily. IWM is still looking pretty decent, right? We've got this long-term resistance. We broke out of it in January of 2021, and we've literally been chopping. This is pretty much, I mentioned this price action on the daily for IWM over the last 8 months, pretty much looks like a barcode. That's pretty much what it is. You just have complete chop, up and down, up and down, up and down. You could probably scan, an NFT with that barcode or something. So Until we break down through this previous resistance, now acting as support, it's hard for me to be that bearish. And that's something I'm taking into account. You can't just look at one chart and say, oh, we're definitely going down. You have to take into account all of these variables and then go from there. So in this case, on the monthly chart, IWM actually hit a higher low than it did last month. So all of these things are telling me that caution, but maybe not panic yet. And who knows, maybe the panic is coming. Maybe the VIX is going to absolutely explode through 30. That's something we just have to take day by day. But previous resistance still acting as support here. If we look at the weekly, we're still trading within this symmetrical triangle here. So if we anchor the volume by price from the COVID lows, which is still relevant, you'll see here, if I can get this, you'll see here that we're still trading right at this volume shelf and the point of control. So, you can pretty much see that this volume shelf is acting as supply, but we have not broken down yet. Don't try to be a hero and try to, make a move before price action tells you to. That is generally how people get themselves in a bad situation. So until we really break down through this support or break out through this resistance, we're kind of just still stuck in this range. So that's the weekly side of things. The volume shelf at this point has acted as supply once again. Now let's look at the daily. Daily, very ugly. Not going to lie here. Does not look great. But let's look at kind of the overall picture here. Same thing. Here's pretty much your range. And until we break this range, the status quo really hasn't changed. So just keep that in mind. If we do start to break down through, let's call it like 205, the status quo really hasn't changed on IWM. So just wanted to point that out, and I will hand it over to Jose to look at a little more of the short-term time frame and what he's seeing there.
Jake, I definitely agree with you. I mean, small caps are doing well relatively to the overall market. They're holding. They've been trading sideways for most of the year, to be honest, and I wouldn't bet against them, to be honest, and not yet. Like you mentioned, I like that level you mentioned, 205. Yeah.
As far as like an options trading strategy, is this something that you would just wait for some direction? Is this something that you buy a position and sell covered calls on it, or some type of iron condor? Is there a specific strategy that you guys are playing for something like this that's been pretty much range bound for 8 or 9 months?
Oh, for sure, for sure. We have a channel dedicated to Theta trades in the group. I don't personally trade them, but we do have some traders that are very, very skilled, to be honest. Selling premium and whatnot,
Awesome. Awesome. And are there people in the room that are actually trading small caps as well, or more or less just kind of playing the larger ETF there, and kind of going from there? Because this is, this is like a prime time for small caps to move. Not all of them, but when I was trading as a degenerate in high school and somehow made quite a bit of money during the financial crisis trading small caps, what you would see is you'd see a bunch of people selling large cap names, names that generally you're not going to sell unless you're panicking, which a lot of people were, and they were kind of forced to at some stage of it. What happens is everybody goes to cash, and then you've got all this capital just sitting on the sidelines that needs to be put to work. And so you've already seen this a little bit over the last couple of weeks. You've seen CEI, DATS, FAMI, whatever that ticker is. You've seen some of these names really move because that's all of this capital that's on the sidelines is trying to find some liquidity, some type of momentum or volatility to get into. And all this capital starts to funnel into a few of these names. And that's why I like to say, this is something that really the first time I heard this was from JC Peretz. The market It's a market of stocks. It's not the stock market. It's each individual name has their own movements. Just because the market's tanking doesn't mean every stock is going down. And so you will find, especially if we continue down, you're going to find some really, really, really big moves to the upside on some of these names. I think PALT was another one. It's because everybody is sitting on the sidelines. They see that all of their stocks are going to crap. They've got all this cash and they want to put it to work. And that's where you get this kind of funneling of capital into, into some of these individual names. And that will probably continue if the market moves down. So it's really about finding, what's strong for the day and almost kind of day trading, scalping that, because swing trading does not work great in this type of market unless we do finally get some direction, which based on the charts we've looked at so far, doesn't look like it's going to happen, but could be wrong. Do you guys focus on small caps as well? Any kind of momentum names, volatility, or do you guys focus more on options on some of these more liquid, larger cap names?
Yeah, we obviously focus on more on the liquid stocks, because we gotta be able to buy and sell quickly these contracts. But we do trade some of the small cap names as well. AMC.
AMC was a ripper today. That's another example.
Yeah, for real. But yeah.
Okay. So let's jump into some individual names now. So we kind of came up with a list that we wanted to go over. Let's start with Penn. Penn is one that I've been watching for a while. I got stopped out earlier this week on a decent sized position, and thank God I did stop out and respected my stops, or this end of the week would be a lot more interesting. But Penn is an interesting one right here because, one, you do kind of have this symmetrical triangle here. You do have not what I would call the prettiest hammer forming, but you do have a hammer forming. You do have kind of this bounce at this trend line zone highlighted in green. And funny enough, you actually have not hit a new low. You still have higher lows from back in September of September 20th and 21st. So I guess, sorry, 21st. So this is one to definitely keep an eye on. And even on the monthly side of things, you do have a higher low on the monthly as well. We hit a low in August of 61. Now, this gets a little sketchy when we start to break down through, let's say, this open of August around 68. Once that happens, we could retest those lows around 61, 62, but that's not for you or anybody to predict. That's for price action to tell you, if this happens, then this is how I react. So as far as Penn goes, I did want to touch on that one just for that reason. You do have the higher lows, something that you're not seeing a lot in the market. You're not seeing a lot of higher lows. You're seeing new lows. And so the fact that this did hold up is worth noting. Now, there are other gambling stocks out there that we will touch on after this. But as far as the weekly goes, this is another kind of setup that I'm keeping an eye on. So we did break out of this little handle, this bull flag, whatever you want to call it. And we're just kind of retesting this previous resistance for now. So if you anchor volume by price from the COVID lows, you still are kind of trading above the point of control, and you kind of have this volume shelf acting as a base for price for now. Now we'll see if that holds. That's not our job to predict. It's to see where price action kind of goes from there. But definitely keep an eye on, let's say, 71. 71 breaks, probably going to break down. Jose, any thoughts on Penn?
Yes, I'm following it here. I think by looking at my chart, I think 60 is gonna be key. Last time that it tested 60, big buyers step in and they just bought it up. Never went down to test 60 again, but right now, with the market dipping, we could see it, in my opinion. We're not seeing like much volume come in here. I would look for 60, to be honest, between 65 and 60. Yeah, I would look for a reversal there.
Oops, sorry. As far as, sorry, I was muted. As far as pen goes, you're looking at the 4 hour. Is there another time frame that you would look at maybe for a shorter term price target before, a further move down, or is 4 hour kind of the time frame that you stay on?
That's the one that I like, to be honest. And I've gotten used to it.
Makes sense. All right, so that's pen. We had kind of a longer term view. We have a shorter term view with the 4 hour. Let's move on to our next one, which is dkng, another stock for those degenerate sports gamblers, which I have too many friends that are that within that community. So dkng, I really want to focus on the daily here, and actually the monthly as well, but I did want to focus on the daily because I don't use oscillators a ton, but there is a time and a place for everything. And I did want to show you guys at least how I like to use oscillators to potentially find bottoms. John Futures Diving. Nice. They must be watching this show or something. Just kidding. But anyways, dkng, this is something that I like to use the RSI, percent range, and the vortex indicator if I can find it. There we go. So this is kind of like call it a visual algorithm, whatever you want to call it. It's kind of just a set of conditions that I like to look for. And you'll notice something here that's pretty interesting. So one, the main variable that we're looking at here, and this is a chart that I posted a couple times this week. So for those that are kind of looking at this chart, like, what the heck does this mean? I'll essentially explain it a little bit. So first of all, we're pretty much looking at dkng from March of 2020, pretty much the COVID lows. And you'll see here that anytime that the RSI 12, and let's change that to the 10, sorry. And the reason I'm changing it to the 10 is to look back 2 weeks. If we're looking at the 12, we don't, the 12 RSI is like 2 weeks and 2 days. So 10 RSI, you're looking back exactly two weeks of trading, because there's 5 trading days in a week. So anytime the RSI has become oversold, I am pretty much highlighting that with the price action. You'll see, for the most part, this has marked lows in price. Now, what's interesting is, especially back in May of 2021, we initially, and you can see here that I'm moving this, we initially became oversold around 23, 24, way up at like 48. And then we continued to move down all the way until around 40 before we finally got a reversal. And what was the signal that this was finally a bottom? You actually had divergence here on the percent range. So you always want to use the percent range and the RSI together, because the percent range is always going to signal that divergence or that potential bottom before the RSI. And so you'll see here, there's no divergence on the RSI. However, you did have divergence here on the percent range, and that marked your bottom. Now, right now, we don't have divergence. We actually hit a new low here yesterday, but notice, and this is not like an end all be all divergence, but it's something I do pay attention to. Notice that we closed red today, but we actually had an uptick in the Williams percent range. So I'm not saying this is a bottom by any means, but it is worth noting this discrepancy where you've got a down day, but you've got an uptick in the percent range. And so not only that, but you'll see here that also that coincides with these two signals. Whenever the vortex indicator, the vortex negative is above the positive, which means the red is over the blue, and you've got a pretty wide range between the two, that's generally showing that the trend is starting to exhaust a little bit. So once the vortex indicator and the percent range start to the percent range starts to tick up, vortex indicator starts to tick down. So it kind of looked like this, kind of like start moving this way. That's when you want to kind of pay attention to maybe that the trend is changing. For now, the trend is not changing. RSI is still very oversold, and we could definitely go lower. I mean, the RSI hit 13 or 14 in May. And so this does have room to move lower, especially with the weakness in the market. And, you don't want to jump the gun. And if you do get in, I'm not advising, but maybe you buy some time. Maybe you don't buy the October 15th $50 calls. Maybe you buy the January $50 calls, so you can have some margin of error there. We'll just have to see. Now, sure, short term interesting, long term horrible. You can see here on the monthly chart, that is a very ugly monthly candle. Pretty much a massive kind of bearish engulfing candle here. Outside bar as well. That is not bullish. So just because we have a signal on the daily, you have to look at the longer term timeframes as well. But also you have to keep in mind, we had kind of a similar setup here back in October of 2020. And we had a massive candle to the upside. We are getting pretty much in the heart of sports season. A lot of people are gambling. A lot of my friends just can't not bet, which is always funny. I like to live vicariously through them. So just keep that in mind. Just because you have this type of candle does not mean you can't reverse. This is why you have to look at multiple time frames before you make any type of decision. Jose, I'm going to hand it off to you. What are you seeing on the 4-hour?
I agree with you. I mean, I think we should start seeing dkng bottom possibly soon, honestly. My key level here is 40, around 40, to be honest. 40 used to be a resistance. The area near 40 used to be a resistance. And as you can see, it basically transformed back into a support. So we broke out here, tested support near 40, and went to all-time high, then tested 40 again, and right now we're trending down. I don't see anyone stepping into buying here. I don't see much volume or anything. Like you mentioned, football season is just getting started. I think we'll soon see a reversal. I'm looking at 40 and 45. Those are my key levels. Once it gets there, I'll be looking for a reversal. But as you can see on the RSI, we don't even have a divergence on the RSI, a bullish divergence.
And a lot of people just think that, oh, the RSI is oversold, and they buy, and then they realize the RSI can stay oversold for a long time, and the price can still drop 10 to 20% from there.
Exactly. Yeah.
So let's move on to a different industry sector, whatever you want to call it. Let's jump into some banking names. I will start off on JP Morgan on the longer term side of things, looking at the monthly chart. And I have to admit, this is a pretty solid setup on the monthly chart. So let's anchor the volume by price from the COVID lows. You guys are going to get tired of me saying that, but it's still a relevant reversal point. And notice all of the volume here, and notice that we have a nice bounce off that volume shelf this month, actually hitting new highs and hitting pretty much new highs for, I guess, all-time highs. And so one thing, anytime you've got a wick like this, I want to see what's going on within this wick. So this is when I would turn on the raindrop chart, kind of look at, see, okay, what's going on here. And it's actually kind of like neutral, right? You don't have a ton of volume at the top of the range like you'd want to see. Now, there is some volume, and it's a green raindrop, so it does kind of coincide with the green candle. But I would want to see a little more volume for more conviction. But just because there's not, doesn't mean that this isn't a solid setup. It just means that the raindrop isn't kind of ideally what I would be looking for. We do have everything else, though. We've got the volume shelf. We've got new highs, all-time highs this month. And you do have interest rates coming back into the picture. And all of those things are not bad for the banks. And honestly, JP Morgan is looking relatively strong on the monthly. Now, if you look at the weekly, pretty ugly weekly candle, but it would close green if we closed here today at the end of the week, but we still have one more day left. We'll have to see if we can actually close green for the week, or we get red. So all in all, JP Morgan, definitely one to keep an eye on. What are you looking at on the 4-hour chart? We've got about 5 to 7 minutes left. So we will go through these pretty quickly and just kind of get an overview of what you're seeing.
Like, I'm seeing a double top so far on JP Morgan. I want to see a bounce near 155. Like you mentioned, interest rates are into a picture in the near future. So I want to keep an eye on this one. You know, I want to see what happens. I want to see what Jay Powell does. I want to see what Janet Yellen does and what happens. But I'm convinced it's gonna break out from all-time high again. We can try to find the bottom, or we can play the breakout from all-time high when it happens.
Yeah, I love it. Makes sense. And shout out to Paul Shama for his conviction on pretty much every growth name going to zero. That is impressive. Baba, zero. Neo, Fubo, zero. Hey, I respect the conviction, but that is quite a prediction. So let's see how that one goes. Anyways, let's move on. Goldman Sachs here. This is another one that is pretty interesting. This is one that I'm not going to spend too much time on. I'll hand it off to you after that. The only thing I want to point out here is on Goldman Sachs, if you do pull up the Williams percent range, you'll see something pretty interesting here. So you've got divergence playing out, which is pretty interesting because Goldman Sachs looks very different from JP Morgan. So you've got these higher highs in price over the last several months, and then you've got these lower highs that have formed, shown by the red arrows on the Williams percent range on the bottom of the chart. So are we getting into maybe a bigger move to the downside? This circle here is just pretty much measuring the move from these previous moves. And these did mark some pretty big moves to the downside. So we'll have to see what happens. But all in all, that's what I wanted to point out on Goldman Sachs. You do have a little bit of a discrepancy between JP Morgan and Goldman Sachs on the monthly chart. What are you seeing on the shorter term side of things?
I'm seeing a double bottom right now near 375. We'll see if it holds, to be honest. Like you say, this one doesn't look as bullish as JP Morgan does. Maybe because possible regulations, banking regulations that they might see in the near future. But yeah, overall, it looks whatever.
I like it. And then we have Mr. Paul Shama saying that he owns shares in all these. Come on, Paul. I was hoping that you were shorting these. But like we said, it's all fun and games here. Nobody's taking any of this too seriously. So for those in the chat, Paul was just kidding. He he was just joking around. So JP Morgan, a little iffy, even though interest rates do look like they're going to go up. Let's look at a couple other ones on the growth side of things. PLTR. PLTR is an interesting one, especially looking at the discrepancy here. Ugly monthly chart. But if you turn on the raindrop, you actually have a very green candle. And you can see a lot of that volume is actually at the top of the range for the month of September. So this is one of the bigger discrepancies I've seen, because most of that volume is in the upper 20s, yet we closed for the month down below 25. So PLTR is definitely one that looks pretty bad on the candle, but then if you turn on the raindrop, you do have quite a bit of conviction by buyers at the top of the range. Now, Jose, from a shorter term time frame, are you seeing weakness? Are you seeing, just a little bit of a pullback with the market? What's the 4 hour showing you?
Yes, right now it's mostly really weak, especially how it closed today on the 4 hour. If you see that last candle today with that ugly wick, I think it's gonna lose this level here, this 24 level here. We also caught some options activity, basically betting it's gonna go lower. Mm, what I would do with this one, maybe if we want to trade it, I would go into a 15-minute and I would try to trade a breakout from here on the 15-minute. But if it doesn't break out, I'm not gonna be touching it.
Makes sense to me. Well, it is about time, but we didn't do any requests and we said we would, so we're going to stick to that. If you guys can request a few names, not all at once, we will kind of look at the most requested names and we'll do two, and then we'll call it a night and respect everybody's Thursday night. So if you guys can mention a couple names that you want to see, we'll take the most requested and then we will do a couple quick chart requests.
By the way, Jake, I just want to mention people in my group, they're telling me that futures are ripping and that they're seeing a bullish divergence on the RSI. So we'll see tomorrow what happens. I think you guys were talking about 0-day plays. I think SPY is one we have to keep our eyes on tomorrow.
Spot futures are ripping right now.
Yeah.
I'll take it. All right, so Fubo is a pretty requested name here by quite a few people. Let's take a quick look at Fubo. Fubo has not had the best month. However, this is why you always have to zoom out. Fubo is still very much in the higher low category. So if we look at the volume distribution using the volume by price from the trend reversal in 2019, nothing's really changed. We're just kind of back to where we were. Yeah, sure, Fubo looked a lot better at 30, but we have not really broken down through any important technical levels. So if you do anchor the VWAP from the trend reversal, you will see that the volume weighted average price is around 30, 31, and we are down here. So the average price per share paid since June of 2019 is holding at a loss right now. And notice that, you know, that's not out of the ordinary. We've had that happen a couple times and we've ripped after that. So from my end, looking at the monthly chart, we're just kind of hanging out at the volume shelf here. I don't know what's happening with Thursday night and Monday night football, but I am not getting those games on my cable anymore. And oh, where is it? It's on Fubo. I Google Thursday night football. I Google Monday night football. Fubo TV is one of the main channels that they recommend that does have the game. So I'm sticking to my thesis here. I do have a long-term position here. I have no plans on selling it. If it does move down more, I'll buy more. This is definitely, in my opinion, not only just a stock that can have a huge possible move to the upside, but an acquisition target, I think, by some of these larger names. So that's my opinion on Fubo. Not going to go too deep because we don't have a ton of time. But if you're looking at the long-term side of things, the monthly chart is showing we are still in the volume shelf, a little below the point of control. I know some of my good friends are looking at around 2021. And honestly, that may be a price that I'm looking at too, to add a little bit on Fubo, but actually a pretty strong day in Fubo considering the weak market. So Jose, I'll hand it off to you. What are you seeing on Fubo?
As you were mentioning, I love this company. I don't know why it's trading so low, to be honest, but this company is amazing. I see their potential. You can look at their balance sheet and everything, and they're just killing it. I'm gonna be looking at the 30-minute chart in here. As you can see, it's dropped 20% from the recent highs. It should be reporting earnings soon. So if you want to trade something, you could easily trade this, a breakout from this downtrend. It's going to happen anytime soon. This is an actionable trade.
I love it. I may buy more just because I like the name, honestly. All right. So next one is, crypto. Yes, we'll throw a crypto name in there too, Mr. Bradley Pie. So let's go to Neo. Neo's been talked about quite a bit here. So let's throw in a Neo. Neo. Let's look at, well, we can look at the monthly chart. Neo is pretty much not doing anything. Doesn't necessarily mean too much. Now, it has held better than a lot of the other Chinese names. Baba, yeah, Baba's gotten destroyed. Neo's actually held up pretty well. So until we really break the lows or break the highs, kind of like what we talked about with IWM, this thing's just chopping around. And, until we break, let's say 30 to the downside, or we break these all-time highs around 67, looks like we're just going to chop. Now, if we look at the daily chart, we do have a falling wedge on the daily side of things. So you'll see here that we are still in that wedge, but notice that the apex of this wedge is still pretty damn far away. So if we extend these lines out, and you can kind of see that they cross right around here, we could still trade within this wedge for quite some time. I mean, if you draw a polyline here, this could go all the way into, well, I guess it's not that long, late October. And then late October, we are going to have to make a move to the upside or the downside. But for now, considering how the other Chinese names have done, this is actually holding relatively well, considering all of the external kind of influences of the Chinese names. Jose, what are you thinking?
I like it, the name. As you mentioned, it's been holding, even though we only keep on getting bad news from China. It's 35% down from recent highs. It's going to be reporting earnings in about 6 weeks. So I think it's going to break from this downtrend. I'm going to be looking at 37. Once it goes above 37, I'll probably be buying some calls there.
Cool. Makes sense to me. All right, let's do Bitcoin real quick, because you can't not look at crypto right now. Crypto is actually doing pretty well, all considering. I think the Fed helped it a little bit, saying that they're not going to ban crypto, so that's good. And now we're kind of at this longer term falling wedge resistance here on the daily. We do need to get through this. If we anchor a volume weighted average price from this big capitulation candle on September 6th, which really was the start of the broad market rollover, this kind of coincides right with this falling wedge resistance right around 45,000. So until we break above this area, we're kind of stuck. We're kind of stuck between that pivot around 39.6, and then we're stuck between that 44.9 to 45K. Now, if you look at the weekly, this is where things get interesting. You'll see that we do have plenty of time left on the weekly, but the weekly candle actually has turned green here, and we are getting very close to the apex. And we'll just have to see what happens. Now on Ethereum, you will see that on the weekly chart, we have this really beautiful ascending triangle here. And I mean, I'm kind of bullish on crypto. This reminds me a lot of 2017. And if I were to guess, I would say we hit new all-time highs, but I will let price action dictate that before I try to be Nostradamus. So I will hand it over to Jose. What are you thinking on Bitcoin and Ethereum? And we will call it a night.
Honestly, I don't follow crypto much.
No?
I'm not an expert there, but from what I've seen, it basically runs on news. We have news, then everybody FOMOs, and then it runs. But I do like the charts. I do like the charts that you were showing there.
Yeah, they're getting close to make or break. Make or break on Ethereum is pretty much a close below, let's say 2,600. Make or break on Bitcoin is pretty much a close below, as I mentioned, right around 39.6. However, that support below, is right around 39.6, 39.2. So keep those levels in mind on crypto. Until crypto really starts tanking, I just can't see the market tanking too much more. To me, if I'm looking at, how is the market possibly going to perform into the week ahead on the weekend, I'm looking at Bitcoin. I'm not looking at these weird, like, weekend Wall Street, futures. I don't even know where they get their numbers from. I'm looking at Bitcoin.
It's funny that you mentioned that, Jake, because I used to do the same thing.
Yeah.
For real, I would do the same thing. And there is a correlation. There's a correlation there for sure.
Yeah, it's always interesting that they didn't always move together. And now it's like, Bitcoin and the markets are pretty interconnected. So it's really hard for me to be incredibly bearish, even though some of the charts we looked at tonight were pretty bearish. Until Bitcoin really confirms that, and that's so weird to say, it's hard for me to get too much on that bear case side of things. But as always, let's let price action do its thing. And we will call tonight. We've already gone past. I want to be respectful of everybody's time on the TrendSpider team as well as our audience. Jose, thank you so much for joining us. He is the co-founder of OptionsSwing. And you guys can check them out on Instagram, on Twitter. They also have a Discord. And I will let you kind of end it with any last words on your end, and we will get back to our Thursday night.
Thank you, Jake, for the invitation. Thank you to your team for everything. Honestly, the tool that you have created for us retail traders, it's amazing, man. I know you're gonna keep on building on it, but it's amazing. It's a game changer for us, honestly. Like to be able to access this, this easily. This wouldn't happen before, It
Well,
wasn't.
we really appreciate it. And the beautiful thing about the platform is there's so many things that we didn't even touch on. So for those that are interested in trying out TrendSpider, if you're not already a customer, we do have the 7-day free trial. So definitely check it out. You have nothing to lose. You can try it out. If you don't like it, cancel your trial. No hard feelings, but it is worth at least diving in and seeing if it works for your trading style.
And I'm gonna be honest, for beginners, it's an amazing tool, and I'm gonna tell you why. Because of the patterns and the trends. Many of the beginners, they don't really know how to chart, to be honest. And the trends and the patterns in here are on point, to be honest. Always they're on point.
Yeah, you made a good point about the patterns. If you're someone that's a newer trader and you don't know what a hammer is, you don't know what an engulfing candle is, go to the patterns, type in hammer, click on it, click apply. Anytime you see a hammer on the chart, it's going to pop up, and you can start training your eye to really look for these types of setups. It's something that a lot of people in the market, they didn't get here because they learned this in college. They got here because they did it 1,000 times, and it's a repetitive process.
100%.
I didn't go to college to learn about the markets. I studied economics. They didn't teach candlesticks. They didn't teach trend lines. It's just something that you have to do over and over again. And eventually you'll find your style. You'll find what works for you. You'll find your process. And that's where TrendSpider can come in and help you get an edge.
Yes.
All right. That is it. Jose, thank you guys again. Thank you to OptionsSwing for being a guest. And everybody have a great night. Thank you for joining. Check out the 7-day free trial, and we'll see you next time.
Thank you.